If you're a federal employee retiring soon, here's the simple way to decide whether to add Medicare Part B on top of FEHB. In the next few minutes, I'll give you the decision rule, the cost traps, and when skipping Part B makes sense versus when it backfires. I'm Tom, a certified financial planner, so let's get into it. First, if you're retired and want predictable costs and more provider choice, you usually add Part B. If you're still working at 65 with FEHB, you usually delay Part B and enroll later, penalty-free when you retire. Now, here's more context around this. Your FEHB keeps working in retirement whether or not you take Medicare. If you do enroll in Medicare as an annuitant, Medicare typically pays first and FEHB pays second. That combo often lowers what you pay out of pocket. If you don't enroll, FEHB just stays primary. Now, here are the cost factors you need to know. Part B has a monthly premium for each of you. Higher earners can pay more because of IRMAA. Those surcharges are based on your tax return from 2 years ago. So a big Roth conversion or large capital gains can bump premiums for a year, and this is something we often plan around. Now for FEHB coordination, many FEHB plans reduce or waive parts of their cost sharing when Medicare is primary, meaning fewer surprise bills if you end up needing more outpatient care. Here are some timing rules that can save you money. If you're still an active employee at 65 with FEHB, you can delay Part B without a penalty. Then when you retire, you get an 8-month special enrollment window to add Part B. We'll have HR complete the CMS L564 form so Social Security knows you had employer coverage. Now, when it comes to HSAs or health savings accounts, once you enroll in any part of Medicare, you can't contribute to an HSA anymore. If you're delaying Medicare and funding an HSA, stop contributions before you sign up so you don't create excess contributions. Here's a quick example of a couple at 65 with FEHB. Path A is taking FEHB only. The pros to doing this are there's just one premium and it's simple. The cons are the higher copays and coinsurance if you use care, and there's less flexibility if you want to see lots of specialists. Path B is FEHB plus Part B. Now the benefits of this are that Medicare covers most outpatient care. FEHB often scoops up a lot of the rest. There's better provider choice and fewer big surprises when it comes to costs because the combined coverage often results in nearly zero out-of-pocket expenses for approved medical care, minimizing unexpected bills. Now the cons are that there are two premiums, one for FEHB that doesn't decrease when adding Medicare and the Medicare Part B premium. And remember, IRMAA may apply here if your income is too high. This is how I decide with you. If you're retired, value predictability, and expect moderate or higher healthcare use, I lean to adding Part B and picking an FEHB plan that coordinates well. If you're still working or this year's income would spike IRMAA, delay Part B, keep FEHB as primary, and enroll when you retire or when income normalizes. But either way, we run your exact FEHB plan, your expected usage, and your income picture so we're not guessing. The bottom line is you don't have to get this perfect. You just need it right for your situation. That's what we do. If you want this done for you, click the link below the video and we'd be happy to help. Otherwise, check out this video right here where I discuss the FERS supplement and how to avoid the 62 FERS cliff so your income stays steady throughout retirement. I'll see you over there.